All right. Hello, everyone. We are getting set up here with our webinar. This week, we are going to go over some payroll stuff like usual, and then we've got some KPI information, and we've got Connor here with us to kind of talk about that. First topic is going to be our Q1 payroll tax info, and then we will roll into those KPIs. So we're sharing, everything's good. So we've got our Q1 taxes coming on up. This is just kind of a slideshow here to give you common errors that we can avoid, what to do if there was an issue, kind of the timelines, all that kind of general information. So first things first, I'm going to kind of go over some info that I've hit in previous webinars just to kind of remind everyone, because we are still kind of in a window here where things can be fixed fairly easily, which I'll get into that a little further into the presentation. But first things first, that UI rate, make sure it's updated. If you've gotten any information on that, it hasn't been sent over to us. You see anything that you have that doesn't match in the system, send it over. We can put it in. It's going to update all your filings in payroll relief, and then we can go from fixing it from there. So please, if you've got anything like that, please send that on over. Dig through your employees and make sure that they have valid social security numbers. This has been a problem we've had in the past where people stick something in there. A lot of times what sneaks through is an ITIN, because if you're not really looking for it, it does still kind of look like a social security number. It just starts with a 9. But there's also been some cases of someone just typed in, a random string of numbers or anything like that. So if there's anything in there that's just obviously wrong, 1, 2, 3, 4, 5, 6, 7, 8, 9, ITINs that start with a 9, reach out, let us know, start working with the employee to get their social security number, because we're going to need those, because it can totally stop us from filing certain forms. We'll have to pull the employee off the form. We'll have to file it without the employee, and then things will be wrong. So just make sure that you have everyone's valid social security numbers. It's going to cause, way more compliance issues if we have something wonky in there than if we just get it fixed now, file the taxes with everything correct. Make sure all your wages are being reported. So if you've got anything like a bonus or anything like that that maybe wasn't on your original payrolls, don't just leave them off the books and hope we can correct them later. It can cause kind of a domino effect down the line where you've got several 941s messed up because we don't have an accurate view of all your wages. So just make sure everything's being reported. If it hasn't been reported, please reach out to us. Let us know, hey, I did bonuses in January. Hey, I did XYZ. We're going to need to get that fixed. So please just be aware of that. And then make sure you have enough money in your accounts to cover your upcoming taxes. Just so everyone is aware, payroll relief lately has been asking us to wire funds when they bounce. So they pay out some of the issues that are being had, and then they say, hey, I need those funds back. I need them back by X date. And if you don't pay them back, they start charging increasing fees. So just make sure that you have that money in your account. Make sure nothing gets wired, nothing too complicated. And the reason I say that is it's just not just for your taxes, but also like payrolls that are going on during these taxes being paid. Anything else that might be happening. For example, I've seen before where a state will change a rate on someone. They'll send you a letter and say, hey, we've made a change. Your taxes are going to be higher. And now you don't have enough payroll funds in the account to make payroll. So just make sure that your accounts are all good to go. You've got money transferred. There's nothing dwindling, to make sure you're all square at the end of this quarter here. So this is kind of our timelines. When do they get withdrawn? Kind of depends on the tax. Some that are more like the manual taxes. So for example, the STL local tax is going to be one of these. They're going to get paid when we file. So I'm going to go ahead. I'm going to send in a file for your local tax, say, hey, you're due this much, and then we're going to hop into the system and pay it out on St. Louis's side. So if it is a manual tax, it's something we've notified you as manual in the past. That is going to probably get withdrawn with the filing. However, generally, most other taxes should be coming out with your payroll. So they're going to be either withholding the income tax or taking out your SUTA and FUTA, that kind of thing. I'm kind of trying to be general here because we do have folks in various different states, and this can vary pretty wildly. So like certain states require more wage reports than the other. So just be aware that generally the taxes are getting withdrawn from the paycheck. Those manual taxes are going to get paid at the end. I try to reach out to everyone and let you know, hey, we're going to be filing this today. It costs X amount, but just be advised. Like I said, if you have manual taxes, we'll inform you, hey, this usually is an onboarding process kind of thing. Hey, your local tax is not able to be handled in the system. We're going to have to pay that manually. If there are any differences, so if we get to the end and payroll relief is stating, hey, you overpaid a little, hey, you underpaid a little, we'll let you know. We'll take care of it. So if you underpaid a little, we'll let you know, hey, it's still showing $100 as a balance. We're going to pay that out, then we're going to get it filed. Or vice versa, hey, you've got 200 extra, we're going to go ahead and get that going for a refund. So we'll let you know if there's anything wonky on those forms, and we'll make sure that everything gets paid and is compliant, and you're not overpaying, don't have a credit, anything like that. So what does need to be filed? This is going to be your Q1 payroll taxes. It's going to be any forms you file quarterly. Like I said, this will vary. If you have monthly forms, they're going to be handled around the 15th of each month. So those will be coming up around the same kind of time. It's going to be kind of tight with those two. So just be aware of that. But generally, you'll see a lot of 941s through this time period. You'll see some quarterly UI reports. You'll see wage reports, that kind of thing. Basically, just kind of an update on where you are in the payroll, what's going on, what's happening, and informational kind of stuff like that. If you are in several states, you'll probably have multiple UI and wage reports. The more states you're in, the more of them that you'll have. So if you're in 5 different states, there might be quite a few little wage reports we got to get into all those folks, let them know what happened for your payroll this quarter. What is due? What is the due date for this quarter? Everything is due on April 31st. I know that the tax quarter technically ends in March, but you get a month after the end of a quarter to kind of give us some buffer time. This is so if errors are found, if there is any over or under payments, there's good enough time to correct it. And that's kind of why we're trying to get the info out now, is so if you notice anything, we have ample time to get in there and tell you, hey, don't worry about it. We got, weeks before it's even going to be filed anyway. Let's get it fixed. Let's file it correctly, etc. You're going to probably start getting mail-in notices that it is time to file. And if you know of any issues and you inform us now, so like that UI rate that I mentioned, we can get them corrected. I do think we had someone just join the call. If you have a question, we're about halfway through our presentation right now, and then there'll be an open Q&A, and we can have a chat. I can kill the recording if you prefer it, and we can knock out any questions you might have. Anyway, let's scroll on down here. So what should you do if you notice any issues? If it's after everything's been filed and paid, you receive any notices, always send them to us ASAP. We'll help you get those corrected. We'll try to look into it, figure out what happened, why it happened. It can be all kinds of stuff. I've seen before where the state doesn't catch a 941X and then they try to refund all your taxes. So don't just see a refund, be happy, and be like, sweet, I'm good to go. Any notices you get, I highly encourage you to send them over to us just so we can check into them, make sure they're legit, make sure everything is good to go. Both over and underpaid. I know refunds look really fun on paper, but we just want to make sure that the state hasn't made an error in their data and they're giving you funds back that then they're going to turn around and say, hey, where'd all that money go? So that's just kind of what we're thinking there. If you receive any notifications about your taxes bouncing, so you didn't have the funds in the account, anything like that, work with us on a reschedule, because failure to do so can cause compounding compliance issues. Again, if the payroll relief folks decide to wire anything, it can cause increasing fees. So if that were to happen, if there were to be any issues like that, work with us. We'll get it. We can get it filed through the system or scheduled to pay through the system again, and just rerun it so you are good to go on that. And the sooner we catch it, the sooner it is that there won't be any penalties and interest. So just make sure, again, you got money in the account. If taxes do bounce, let us know so we can work with you to reschedule it as soon as possible. And at this point, I'm going to turn it over to Connor.
Thank you, sir. Okay, KPIs. Just going to do a general little chat about them, what they are, why they are good to kind of keep in the back of your mind as you're going about your day-to-day. So as an overview, key performance indicators, they measure your success in the business and they can help guide decisions. They can align your goals, your teams, track performance, and just provide visibility into what's going on in the business, whether that's sales, marketing, operations. It's the essence of taking your numbers on the P&L or your balance sheet, reviewing them, and seeing what happened over the course of a month or quarter or half a year or so on and so forth. Why do they matter? They help provide clarity for benchmarking. They can improve your accountability. They can help drive your decision making. They can identify some growth opportunities. So on the benchmarking side, for those of you who may be in a franchise or have readily available industry data, say you're in the restaurant industry, you can take your P&L numbers and compare them month over month, quarter over quarter to other restaurants in the region or other restaurants in your specific category. Say you're a barbecue place and you want to see how is everyone else pricing the pulled pork, how profitable is the pulled pork, so on and so forth. On the accountability side, it's good to know, especially for a good example would be like for your sales staff. So say you're aiming for revenue targets month over month, quarter over quarter of a certain percentage growth, and you got a few outside sales reps, and just want to know how they're doing, where they're struggling, where they're succeeding, and if someone is really struggling in a mark, maybe it's time to review their territory, or see what they're running into and how the performance can be changed over time, and it can also actually provide some clarity for the employee as well. If they know they have an open channel to come to you and let you know that they're struggling, that can be a good heads up that it may be time to make adjustments. Data-driven decisions. It's a good one. I mean, not everyone is a numbers person. I get it, but once you kind of get some of these basics, in your head about what the revenue is doing, what the profitability is looking like, how much are you spending on your marketing, how much are you spending on rent, that kind of stuff can start to stick in the back of your mind. And if you've got, purchasing decisions to make, or, growth decisions, say you're, wanting to, spend a little more on marketing next quarter, or you want to, do a big one, jump into a second barbecue location, selling some more pork. That having those numbers understood and ready to go can help when it comes down to the game time decisions. Growth opportunities, same thing. I don't know why I've got pork on the mind. I guess I'm hungry, but if it's time, if it's time to grow and you got to make some calls, maybe it's whether you got to go take out a loan or you want to secure a second office, second space for the business to grow your revenue, so on and so forth. That takes a lot of info, and if you make a decision, just off the cuff, and it turns out to be something that's tough to get out of, it can put the business in a tight spot if you're not ready for it. Okay, common KPIs. Got just threw a few on here. So just start with gross profit margin, profitability of your services or your goods before your overhead. So just rolling with the pork analogies today. Say you're the restaurant, and it's between the cost of pork and the cost of all your barbecue sauce and the labor of the cooks, everything that's directly tied to the sale of your primary business revenue driver or service goes into gross profit. So you sell $100,000 worth of product this quarter. and all in your direct costs are $50,000, you've got a gross profit of $50,000. Gross profit margin, you just take that, divide it by your revenue, and you're at 50%, which I think is pretty healthy, regardless of where you're at. Net profit, same thing as gross, but it takes into account everything. So bottom line, after all your expenses are accounted for, your net profit divided by that total revenue for the period will be your net profit margin. This takes obviously into account the gross profit margin as well as everything in addition. So all your salaries, your rent, insurance expenses, and so on and so forth. Customer acquisition costs. How much does it cost for you guys to get more clients? How much does it spend? You gotta, if you're service driven like we are, it's a lot goes into, pay-per-click marketing spend, so on and so forth. What does it cost you to get a new client, and how reasonably quickly can you do so? It's great for sales and marketing efficiency. And going off of us, or someone in the service industry, if your primary customer acquisition comes from pay-per-click marketing, and a marketing campaign is costing you more than you'd like, and it's not producing great results, then maybe it's time to adjust. Customer retention rate. How long can you keep your clients? What does it look like month over month, quarter over quarter? Helps when you're digging into your recurring revenue, especially if you're a business that relies on that. And also it can play a pretty key role in your budgeting. If you know your clients on average will stay with you for 2 or 3 quarters out of the year, that can help you create more accurate budgeting models. So that is also great. And then attrition, the loss of clients. So this one, it measures how many people you had at the start of a year, for instance, versus how many left, and takes into account clients that were gained as well. So it can it's not something you ought to be looking at every single day and driving yourself nuts over, but it can definitely highlight some real risks to your revenue if that number starts to creep up. Okay, some best practices for the KPIs. Keep them focused to your business. Not everyone has to monitor every single KPI that's relevant to the P&L or the balance sheet. And if you try and track 18, 20 different metrics per quarter or month, it can be it can be a lot. It can also not be super beneficial, especially if it's not something that your industry really caters to. Align your KPIs to your goals. So just for instance, if you're at break even, you might want to be, or if you're at or slightly below break even, maybe it's time to really hone in on the gross profit margin. How well is everything being priced? Are your costs too expensive for the direct portion? Or for instance, if you're looking to expand, your goals might need to switch to align with that as well. Review your KPIs regularly. Clarity can come from real-time understanding of your numbers, and that's like I mentioned earlier, it's not something you got to be going over all the time, but once you get a little familiar with these metrics and how they can impact your understanding of what's happened in the business and what can be predicted going forward, it can help you have a clear head when it comes to making an impactful decisions, stuff that's big time spending or expansion efforts. Turning your KPIs into action. One good one good practice of this is sharing insights with your team. So like I mentioned earlier, if you got a sales staff, so share the sales metrics with them. Let them know what your goals are for the revenue for their portion of the revenue, their goals, their targets. You can share P&L metrics with the other leaders at your company, so more attuned to the margins of the business, or even on the balance sheet as well. Um, Another action, adjusting your strategies based on the data, like I mentioned. If it's time to kind of batten down the hatches, and you see that costs are creeping up, and it's time to review, maybe it'd be good to look at the budget, look at where you're spending what, set targets, and track progress. So like with the sales staff, you can set growth targets, or you can do that with the leadership as well. Tracking the progress is also key, whether it's monthly or quarterly. Just go over what's happening in the financials and how it's comparing to what you predicted. Going off of that, refine the metrics. So if expansion has happened recently and you're trying to measure how well that addition to the business is doing, then adjusting some of the metrics that you were using before the expansion to account for that could be beneficial. So that's about it from my end. KPIs are great, and all info for some basic ones are online. Highly recommend checking them out, and then just give your P&L a look over, see if anything stands out, and even if you're in a big enough industry, check out ChatGPT, check out other sources of info, and try and find out how people in your industry are doing, and can compare yourself. See where you are, and see how things can move forward. It's great. KPIs are wonderful. So that's it from me.
Yeah, and I think that's the end of our presentation. It looks like our person for Q&A might have popped out on us, so I think that is going to be the end of our presentation. Well, as always, we'll have another one of these at 2 Central on Friday, and we'll send out an email probably around Monday with the topics. So thanks all for coming and watching, and hopefully we'll see you next time.